Have you ever wondered how you can make money with cryptocurrency without risking huge amounts and earning profits almost every day? Today, I'm going to show you a real method of arbitrage on futures that actually works. I'll explain all the details and risks, show you a trade, and also how to find spreads. So this video will be as interesting and useful as possible for those who are into crypto arbitrage and for anyone who wants to learn how to make money with cryptocurrency every day. So make sure to watch until the end. Give it a like, subscribe, and let's get started. The arbitrage scheme on futures is extremely simple. It's been working for years and hardly ever changes, so let me explain how it works. We see the token listed at different prices on different exchanges. Where the token is cheaper, we go long. Where it's more expensive, we go short. We make money off this inefficiency. The difference in price is called the spread. We lock it in ahead of time. When the spread closes, we close the position, and that spread turns into profit minus the commission. How does this work? Look, on the exchange where the token is cheaper, we need to have a deposit. We either transfer money there or keep a deposit in advance, and then we pick a certain number of tokens, say 1,000 tokens. That's it, we go long on 1,000 tokens. At the same time, we move to another exchange where the same token is more expensive. There we short the same 1,000 tokens. It's important to enter with the same amount of tokens on both sides, and then we just wait for the spread to converge. When the spread converges, we close the position, simultaneously sell our long position, close our short position, and lock in the difference as profit from the spread. I'll show you how to find such trades a bit later. We'll also go over a real trade that we did with a small deposit. So even with small deposits, you can consistently make money with this strategy. We'll go through all of this together as well. But let's talk about risks, because there are risks involved in this type of arbitrage too. The first risk is slippage. When you open a trade, the price can change suddenly. If you open a large trade with a market order and the trading volume for that token is pretty low, you'll experience slippage. So when you use a market order, all the small orders get filled and your trade ends up being executed at an unfavorable price. To avoid this risk, you need to open trades using limit orders. In other words, you should enter with limit orders, not with your entire amount at once. If you want to enter with, say, $10,000, you shouldn't just open a $10,000 market order right away. You should use limit orders, break up the amount into, say, $100 or $200 each, and gradually build your position. At the same time, open a long position on one exchange and a short position on another. The second risk is liquidation. If the price moves against you, say you're in a long position and the price drops, even though you have a short open on another exchange, you can still get liquidated if you're using high leverage. So to avoid this risk, use minimal leverage, at most 3 times leverage. Also, make sure you have enough margin so you don't get liquidated. The third risk is the delay in transferring funds between exchanges. While you're moving assets from one exchange to another, waiting for tokens to arrive, or transferring from one account to another, the spread can either close or widen, and you might simply not have time to enter the trade. I advise keeping deposits on several exchanges at once. If arbitraging between Gate and MXC, pre-fund those accounts and only seek spreads there. That way, you'll be able to enter trades as quickly as possible. The fourth risk is fees. Different exchanges have their own fees, and these fees can eat into your profits. If you're arbitraging with a small amount, the fees can eat up all your profits, so you definitely need to pay attention to the fees. Taker and maker fees are publicly available on all exchanges. You can check what fees you'll pay for opening and closing a trade, so it's important to take this into account as well. If you open a trade with limit orders, your fees will be lower. The fifth risk is the change in the spread. While you're opening trades, the spread might already close or widen against you. So to avoid this risk, you need to act instantly and use an arbitrage scanner that helps you find spreads. In other words, it shows you the spreads on different exchanges in advance. You just go in, see the token, see where to buy and where to sell. You go to that exchange in advance, quickly open a trade, and then you're already in the trade, so you're not just sitting there thinking, should I go in or not? By the time you've thought about it, the spreads have already closed. That's why you need to act as quickly as possible and use the Arbitrage Scanner software, which helps you find spreads. Now let's move on to the case study. The coin dark, a 4% spread between Gate and LBank. Also, in futures arbitrage, we see that the Arbitrage Scanner sends a signal for the dark token with a spread of almost 7% and 7.7%. But while I was getting in, again, while I was transferring the funds, the spread had already closed and was down to 4%, so we only entered at 4%. Again, we've already talked about all these risks above. The faster you act, the faster you can make money. Look, on the LBank exchange, I have an open short because the token is more expensive there, and on the Gate exchange, I have an open long because the token is cheaper there. Naturally, we already have a profit, and we can close the position. Now, let's calculate how much we've earned together. We entered with 50,000 tokens, and in the end, our profit was about $10. Yeah, it's not much, but we only put in $250 in a 4% spread. There are spreads that are much bigger, for example during listings, so you can earn even more. It all depends on the spread and the amount you put in. So the bigger the amount, the more you can lend. And here we made a conservative $10, almost risk-free, on an amount of about $500. That is $250 on one exchange and $250 on the other. And so we opened a trade for 50,000 tokens. There were also limits on the LBank exchange, meaning we couldn't open for more than 50,000, but you can get around these limits by using multiple accounts. Just register several accounts for yourself, deposit funds in advance, and enter the trade for multiple accounts. Also, on the Gate exchange, if there's a high limit, you can just go long on one exchange and, for example, short on 3 other exchanges. Again, all of this comes with experience. For now, you need to learn how to work with 2 exchanges. Now, let's get to the most interesting part. How do you find these spreads? People often ask, how do you find spreads? How do you find them quickly and get into trades? It's almost impossible to do this manually, because all the services like CoinMarketCap and CryptoRank show spreads with a delay. That's why you need to use services that show spreads on exchanges in real time, so you can check them and enter a trade. Personally, I use the Arbitrage Scanner service. I mention it in every video because it's the best tool for crypto arbitrage. Trust me, you won't find anything better. This service includes all types of arbitrage: CEX plus DEX, futures arbitrage, funding arbitrage, spot plus futures arbitrage. In other words, all types of arbitrage are already here. You just buy a subscription and get access to all types of arbitrage. Yes, the service is paid, but the subscription is actually quite affordable. Especially if you do arbitrage regularly, you'll easily make back the cost. So the monthly subscription starts at $99 for the basic plan, then business is $195, platinum is $397, and enterprise is $795. There are also special types of subscriptions listed below. You can set the language to Russian. I use English because it's more convenient for me, but you can switch to Russian. Here you'll find a full description of what each subscription offers, and the more months you choose, the cheaper the subscription gets. So we'll come back to the subscription a little later. Let's take a look at how the service itself works. Let's go to Perpetuals Arbitrage. Configure parameters, including which exchanges to buy and sell on. Again, if for example you're arbitraging Gate and MEX, you can select Gate as the buy exchange and MEX as the sell exchange here. That's it. You've selected the exchanges, and you'll only see spreads for those exchanges. Next, you can set up all the exchanges however you want, and then you'll be transferring your deposit accordingly. So, if you see a spread somewhere, you transfer money to that exchange, enter the trade, and then lock in your profit. Minimum profit, maximum profit, these are the settings I'll leave as is, as well as the transaction amount, meaning the amount you're willing to trade with. You can choose a strategy. There is futures plus futures, which we're talking about today, spot plus futures, which we discussed in the previous video, you can check that out, and there's also futures spot. So there are different types of strategies. You can also set the minimum and maximum lifespan, adjust spreads, funding rates, all of that can be configured here. And below there's a convenient table displaying the spreads, showing the token, and you can view the spread history. This history helps us track how much the spread on a token widens, and whether it ever narrows at all. Because there are tokens where the spread widens significantly, stays that way for a long time, or never narrows at all. We don't enter such tokens, so the spread history helps us track higher quality trades. Next, it shows us the buying exchange, the selling exchange, as well as the profit you would earn. Trading volume is also displayed, along with the spreads and funding. Customize the table to your liking by displaying only needed parameters and hiding others. Currently, there aren't any significant spreads, just about 0.3 or 0.4%, which aren't particularly attractive. Let's sort by... oh, here we go, there's a spread of 6.7, 5.2... So yes, there are such spreads between BingX, BingX, MEXC, BingX. So here's a trade opportunity, go ahead. On MEXC, the token is cheaper, on BingX it's more expensive. Where it's cheaper, you go long, where it's more expensive, you go short. That's it. When the spread closes, you close your position and lock in your profit. How much is it? It was 5%, but now it's updated, it's gone. There's also an opportunity with the VCT token, so let's look at MEXC and BingX. Let's go in right now and see if there's a spread between the tokens. Alright, I'm going to MEXC and BingX, and we're checking the spread that the Arbitrage Scanner gave us. And sure enough, there is a spread. On BingX, the token is more expensive, 78.7 cents. Next, we look at MEXC, and here it's 73.2 cents. So we have a price difference, just like the Arbitrage Scanner showed us. Where the token is cheaper on MEXC, we go long, and on BingX, where the token is more expensive, we go short. And that's the inefficiency. We're taking advantage of this inefficiency, which is called the spread. When the spread closes, we simply close the position and lock in the profit. This is the simplest way to make money off market inefficiencies, which show up every day. So if you want to earn steadily from cryptocurrency, take a closer look at crypto arbitrage. Our channel has tons of useful videos with case studies, reviews, and detailed breakdowns on how to enter and exit trades. Trade analysis? It's all on our channel, so make sure to subscribe so you don't miss any new videos. As I mentioned, besides that, there's spot plus futures arbitrage, and then there's an arbitrage scanner that lets you scan pools. There's also a DEX scanner that lets you search for arbitrage opportunities and liquidity pools between DEX and SEX, as well as DEX to DEX. There are many different types of arbitrage, and I won't go into detail on each one right now. There are separate videos dedicated to these types of arbitrage. There's also funding, for example, funding at 2.5%. Look, on Bybit the funding rate is 2.5%, while on XT the funding is 0. Where the funding is strongly negative, we go long, because with negative funding, short sellers pay long holders. Where the funding is 0, we go short. Accordingly, we make money on this difference because our position will pay us 2.58% for holding along. So we're going against the crowd, and for that, the exchange pays us funding. Every 8 hours, sometimes more often, depending on the market situation, the exchange pays us funding. This is how you can passively earn from crypto arbitrage. We also have a video about funding that came out recently. Be sure to check it out. So it's a really cool service. Let's move on to subscriptions. Again, like I said, the more months you choose, the cheaper the subscription will be. Various subscriptions exist, but note that futures arbitrage requires a business plan. The starter tier only includes inter-exchange arbitrage, which is now outdated. Spreads appear rarely and disappear quickly, so it's better to use futures arbitrage or spot plus futures or funding rates. Pick the business plan for access to futures. For example, I use the Platinum subscription myself. It suits me better. There's the Enterprise plan, and at the bottom there are special types of subscriptions that give you access to a private chat where people share trades, a personal manager, and access to all side events. Basically, all the perks are available starting from the Guru and VIP subscriptions. They've also introduced a whale subscription, which is a must-have for those with huge capital who want to earn more. There's the whale plan. You can check it out too. The manager will basically explain everything to you in the chat. I also have a promo code that will double your subscription, Nikita Arbitrage. You can find it in the description. Just dive in, enter my promo code when you buy a subscription, and I'll double your subscription period. So if you buy a 1-month subscription, you get 2 months instead of having to pay again the next month. You simply double your subscription. So this special offer is available just for you as well. If you want to earn steadily with cryptocurrency, use arbitrage, because these are market inefficiencies that show up every day. Thanks to various services like Arbitrage Scanner, you can conveniently highlight these opportunities in a table, then enter a trade, lock in the spread in advance, and when the spread closes, lock in your profit. This way you can earn with minimal risk, because you're not guessing whether the price will go up or down. You simply spot the inefficiency and take advantage of it in the market. So use arbitrage to earn steady profits from cryptocurrency. A link to Arbitrage Scanner is in the description. Be sure to give it a try. There's a free trial day, but I still recommend the business subscription because it unlocks futures, and with futures you can make much more from crypto arbitrage. So all the useful links are in the description. Subscribe and hit the like button so you don't miss new videos. Share this video with your friends, and I'll see you in the next ones. Bye everyone!